What's up, YouTube? It's Todd here with Taste Tracker, and today I have a 2021 Small Account Challenge update. So far this month, we've made 166. So basically, offsetting what I lost last month. Let's go over to the history to see what I've done recently. Um, I think I was back in here the last time I did an update, but anyway, ended up being able to close FDX FedEx for $62 and Deer for $90. Then I put on Cat, Snap, AMGN, which, I know I'm a glutton for punishment here. eBay, Twitter, those are the new positions also here. Just before earnings, luckily, we talked about it in the Discord server, decided it would be best to close Disney before earnings. Thank God we did. Because it had a pretty massive drop, lowest it's been in, I think they said, a year or so. Yeah, last time we touched these levels was back here January. So yeah, basically a year, December of last year. So anyway, I did enter back in, I think, some Disney on another account, but not in this account because of how small it is. Potentially riskier play. However, this is an inside candle, which is generally a good thing here. We're forming a base here right at 158.50, sort of in that area. So that's not to say it doesn't come down lower and potentially fill this little bit of a gap that we have here down to 155. But staying up here at 160 is also very possible. Okay, so I'm just going to go over the positions. I do have a working order to close out some of my Doge. Once it gets a little bit higher, then I hope to enter back in on a dip and just sort of average out until I can exit that position completely. As you can see here, I don't have Dow anymore. That was a great close for break even. Airbnb a bit ago that closed, but I think Dow had closed maybe since we had spoken last. Of course, that's not going to show here because this is just options. Okay, so let's go over AMGN. I have the 215 as the sold leg. I definitely think this is ripe for having a climb back up. In between these two yellow bars is sort of its average range over the past year or more. Yeah, I mean, we're talking pre-COVID is when August of 19 it first bounced off of this, and then we came up in October. So October of 2019, before COVID hit, is when we entered in this range. Of course, during the COVID dip, we got out of it, but then we came right back in as the market recovered and have been in this between these two yellow lines since. So here's a blue line that's acted as support, a green line that we've basically been trading in from here over, and then definitely this yellow was this little area here. So we had the huge reset back down to below the yellow, but are now above the yellow. So let me zoom in here a second. Okay, so we can see we've had a pretty nice recovery back to above the yellow line. We can ignore this one. And the green line right here is 215. So it doesn't need to come that far up in order for this to be successful. Let's see what the expiration is on this. Okay, so we have 21 days here for it to get above this green line, and we're currently sitting here. So we had the nice push through the 20-day, then we had a nice push up through the 50-day, and then it's consolidating back down. But what you can obviously see here is the 20 days coming up, and what's going to happen there, or should and typically happens, let me get my crayon, is that this wants to push the stock up, right? As it's continuing to hug the 50 down, but then the 20 comes up and it wants to lift the whole stock up. Did you like that motion? Till we're back up in this area. And then of course we have the same thing that would happen then with the 100-day. So it is possible that I need to roll that out. I still have $517 that I can use. That's funny. Is that new? Never noticed that before. Um, yeah, so I still have $500 that I can roll this out, down, and wider, or more than likely just roll it out or out and wider to collect more premium. Um, yeah, obviously if I'm going wider, then the collateral needed for that position is more, but I'll be getting a credit for that. So I'll be lowering my break even essentially, even though I'm putting more for collateral. Okay. So in sum here, I think we're at a very, very good spot. We don't have too much further to move. Right now we're at 211. We need to get it to 215. We have 21 days to do so. If not, I probably would be looking to roll next week. So if the 20-day by the end of next week hasn't pushed this up, then I would be looking to roll. There's a possibility that once it does have that push through that we would get a nice green candle back up in here into 218, and that might give me a chance to exit without actually having to roll it. Obviously, we'll see when we get there. So CAT is the same as a deer was. It's an infrastructure bill kind of play. I hate when I leave that on. Okay, so let's zoom out again here. Okay, so deer actually and cat both had this huge climb up. Maybe I should just go to weekly and reset. Okay, so it had this huge, huge, huge climb up from basically beginning of 2020 until the May of 2021. So for over a year, it basically went straight up. So obviously, with that long of a run, it's not unnatural to come back down and have a some consolidation and some confirmation of the move that it went up. So it got the whole way up to 245, and now we're back down to 190 as far as this move here. We've already come the whole way back up, reclaimed the 20 and the 50 SMA lines here. Again, this is weekly, so let me go back to the day chart. Here we're actually above all of the SMAs, which is great. We've had a nice run up here. Let me switch to this trend. So something like that is the channel that we're in. Today and kind of this week has just been kind of weak in the market. So again, not surprising that we came down here. But this acts as confirmation. We're near the bottom of this channel when we move into next week. And again, so again, next week I would like to see something like this back up to this local high of 215. Again, I think I could exit on that move. Actually decently close. I sold the 200. Have a closing order at the moment for 70. Yeah, and it's at 101. So only need $30 more to go. Excuse me, before that one is ready to go. So that's a good play. I wish I could sort this by price. I'm not aware of the ability to do that. It looks like it's just alphabetically sorted. eBay is one of the newer positions. I really like where eBay's at. I doubled down on this position in a different account. It basically, again, has had a nice run up here. These channels are a little wonky, but yeah, you could say for sure, no matter how you draw your channel, it's coming down here to the bottom end of its channel. RSI is still pretty hot, and let me draw this line. So we've got it getting hotter, making higher lows. MACD is actually starting to lose momentum, and these lines are still on the top half above zero, which is good. Especially if we can have a bull run here, then they'll never actually make this cross down here to the bearish side of things. But you can see here when we're way above zero, good things happen in the stock in general. So yeah, so I like where this is positioned at, especially today. If you were able to time this entry right as it touched the 100-day, I think that was a really good entry. Of course, you know, as with everything, that remains to be seen. I have the 72.5. So that's down here where I drew this green line. The theory being that it was, I entered this position a little bit before the 100-day had gotten there with the anticipation that its trajectory is going to be up there and past that by the time of expiration, and it should act as strong support, as we can see down here and here and here and here. It's bounced off the 100-day pretty good. So yeah, all signs to me point to say that this is coming up, and my strike sold leg is down here at a good spot below the SMA. I guess I should look at what my closing order is right now. It's got a value of 82. And I don't have a closing order set up. Also, because this was a narrower spread, normally I'm doing 5 wides on this account, but because it's narrower at 2.5, then I did 2 contracts. So that's nice. But I should probably go ahead and set this up. eBay, I want to close it around 40. So I'll do close 2.4. Okay. Yeah, so it's basically right where I entered it, again, because today's been dipping. I think I entered back in here. So if you entered it today, you would get just as good a premium as I had gotten. Snap. So Snap, took a tumble with all of the other, I think it was actually the first one of the socials to take a tank during the earnings season here. Because of Apple and I don't know, maybe other issues. Currently, I have the 50 and it's sitting at 108. Did I roll this one? Nope, I didn't roll this one. So I sold the 50. So if it stays right where it's at, right now it's trading at 53.36. If it stays right where it's at, I'll be fine. That's obviously was intentional. So I have the yellow line here at 52, what I'm seeing as support. I think that's very evident here. We've based here for 2 or 3 weeks. And my sold leg is down here below all of that. So sometimes it does plunge down through and then hopefully it recovers. The 20-day is beelining basically to sort of catch up, and so I wouldn't be surprised if we sort of come up to meet it somewhere up in here next week, and then it gets smacked down to the to this yellow line again underneath of the 50-day. So the 50-day, well, I guess I can just do that, and so it would come up here, and then we'll have a breakthrough. So yeah, my original line there still applies, but that's sort of what I'm anticipating. As we can see, it's consolidated pretty nicely here and is already starting to go green. It's not going to rocket up by any means because RSI is still pretty poor. It needs to make a series of higher highs and higher lows, and that's what this is about. Hopefully it doesn't come the whole way down here when it does check that, but if it does, that would be a great entry as well. But the whole point is it needs to build up some momentum before it can get to those highs. But anyway, this position is very likely to succeed because of this line of support, assuming that still holds. If not, obviously I would roll it out, down, and wider if needed. Okay, so Twitter went down with Snap. And it wasn't quite as dramatic. I was hoping this base here would be good enough. We dropped down again, so I doubled down on another count, but MACD and RSI are still looking constructive. It hasn't gone way further under this base. I was saying it should have held at 53, and we're down at 52. So it's only $1 lower than what I was hoping. However, I don't like seeing that step down. That's not comforting. It's supposed to break out of this wedge. And so you can see as it got closer, it bumped up against it and then failed. It wasn't ready to proceed further. Okay, so that's the 52.5. Yeah, so I need it to come up 50 cents by expiration. As always, if that doesn't happen, I'll roll it out and down. I think that covers everything. Yeah, so if you have any questions, let me know. I'll talk to you next time. Thanks.